I want to talk about two things this week. One is unemployment, and two is some updates on the CARES Act. Um, let's talk about unemployment, okay? It was bad, all right? 15% unemployment. There's no way to sugarcoat that. That's a high number. Now, it is sector related in the economy. So, an economic sector would be like retail or hospitality or industrial or manufacturing. Um, the majority of the unemployment that's coming across is focused on the retail, hospitality side of the economy, which clearly is a effect of the corona or COVID virus. And so the expectation or the hope with this unemployment number is that it would come down quickly as we open the economy back up. As their jobs get recreated, as consumer demand for retail, hospitality type services, airlines, things like that change, quickly jobs can open back up. If you look back and you study the Depression era unemployment, it really bled in hard in those eras. It bled into the industrial, the manufacturing sectors of the economy, which can cut a little bit deeper, if you will. It doesn't mean industrial workers or people that work in manufacturing are more important. It's just their demand and their supply issues there that are different than would just purely be for consumer-facing type businesses, hospitality, restaurants, things like that. So, we always need to hope for the best, prepare for the worst. I think best case scenario, they all get back to work quickly as we continue trying to contain the virus. Worst case scenario, markets tend to price in recessions early on. And so we've seen the market obviously take a nasty dive in March. It's clearly bounced off those lows and seems to kind of be hovering in this particular zone we're in now. And it's hopeful that unemployment, as it appears to be, is already sort of priced into the market valuations we're seeing. Last week when the unemployment was reported, the market really didn't react to it. So from an investor standpoint, hopefully we've already experienced the worst. Now, let's talk about relief in the CARES Act. We had a question come up last week, and the question was, as a retiree, what's out there for me with the CARES Act? Well, clearly you have the stimulus check if you qualified. But two, really the only other thing is a deferral of taxation from a withdrawal of retirement accounts. So keep in mind, when you withdraw from a 401k, IRA, anything that's been deferred for taxes, you pay ordinary income taxes when you make that withdrawal in the year you make it. So if you take a $10,000 withdrawal this year, you're going to owe or pay taxes on that $10,000 when you file your 2020 return. Well, the CARES Act provided that if you've been directly impacted by COVID, whether you've had the virus or immediate family members had the virus, whether you've suffered adverse consequences, a job layoff or a furlough, loss of hours, loss of income due to the virus, or you've had to stay at home because kids can't go to school and maybe you've lost your job or you're taking a temporary leave of absence from work, that's a direct effect. All those will allow you to defer the taxes, or spread the taxes, I should say, over 3 years. So if you take $30,000, you can include $10,000 in 2020, $10,000 in 2021, and $10,000 in 2022 for your taxes. Now, your CPA, your tax preparer, hopefully is aware of this. I'm sure there'll be forms to complete, a way to prove maybe. It might just be the honor system. It's hard to know how the IRS is going to want to know if you were affected and how you were affected. So hope everybody has a great week. I hope it's an interesting week. and let's all enjoy this quasi-spring-like weather here, because summer's coming. It's about to get hot. Take care.